here is showing you just the average prices of Calgary broken down by submarket. So right now in the Calgary market, Urban Analytics is tracking over 180 actively selling new multifamily home projects. So these numbers are on a price per square foot basis, and they probably look quite different than what you're used to seeing. So it does show you that there is these more affordable opportunities here, just as the cost of living differs, cost of land differs. So it does create that opportunity. What you will see in this market here is the C for the concrete, of course, the highest price concrete being in the downtown core, wood frame for the WF and the townhome prices, just broken down by the big submarkets. We do follow our submarkets fairly closely to the Calgary Real Estate Board kind of outlines for them. And I'll go into a little bit more detail. But before I do that, it's good to look at the quarterly sales comparisons. So we did see a 30% decrease in sales in Q2 compared to Q1. Now, with the Calgary market stats, we're actually a month ahead of the calendar year. So Q1 ended at the end of February. So February 29th is what we classify as Q1. So if you can remember February 29th, it was probably that first week of March that COVID hit. So with, as I said, about 75% of sales centers closing for at least 2 months, we still achieved 461 new multifamily home sales in the past 3 months. I was quite shocked and impressed. The reason being, of course, is you cut out 2 months of sale activity. That shows quite a strong June. And that 30% decrease, I mean, I'm very excited to see how Q3 does, but that 30% decrease to me is not as bad as I was anticipating when the whole world went into this lockdown, don't move, don't leave your house mode. When you look at Q2 2020 compared to Q2 2019, of course, there's a decrease there too. However, you know, I'm not, normally if there was a decrease in Q2 without COVID, I'd be a little concerned, but with COVID in place, that actually is showing me some optimism. So that's the quarterly sales breakdown there. If anyone has any questions or want more detail on anything that I'm mentioning, just feel free to jump in, type a message, please. But of course, we're got to look at, you know, what we're on track for the year as well. So this chart here is showing you how many multifamily sales the Calgary market has seen in a whole year. So of course, 2014, right before oil hit, was the strongest we've seen. However, when I am looking at 2020 here, we are on track for, if we were to kind of, you know, we're on track for over 2,200 sales. I do anticipate the third and fourth quarter to be higher. So that is a pretty positive number there, considering the current circumstances here. We always just like to do a half-year check-in, see where the sales are at. And given the circumstances in this year, that 1,120 is fairly good as it's occurred since start of the year to, I think this was June 2020. And in the Calgary submarket, where do these sales occur? Well, right now you will see the outer south and outer north making up 66% of all of Calgary's multifamily home sales. That is completely due to the number of projects out there. The downtown and inner city in Calgary, the downtown only has 10 new actively selling projects, and I think 8 out of the 10 are over 90% sold out. So we don't have that new inventory that has been coming to those inner city markets like we do the outer suburbs. Why it keeps happening in the outer suburbs, though, is city zoning and requirements to have that multifamily. So any of these new developers who are building new communities, they have to meet a certain multi requirement. So they will get product out there at a very affordable price point, which is what really drives those sales in the outer submarkets. And just with that, I'll dive into each kind of area quickly. So downtown Calgary has really not seen much new development. So Kensington, we consider in the inner northwest, even though you're just across the Peace Bridge of downtown. I would still say that Theodore's would be a competitor to downtown projects, but there's not that many that are currently selling. So Nude was the most recent big downtown project launch, and it launched in 2017. Anthem launched their landmark at Waterfront, but it's only 20 homes. So aside from those two, 8 out of all 10 downtown projects are over 90% sold, and they really just have their remaining couple units left. The average price for a downtown concrete project right now is $691 price per square foot. And right now there are 124 units of standing inventory or move-in ready units that are available to purchase and move in tomorrow if you wanted to in the downtown market. But as I mentioned, some of these units that are straggling at certain projects are kind of those undesirable units. They may not be the best floor plans, they might have the awkward views, and they just haven't moved. Inner city, so this is what we would classify Kensington area or Sunnyside as the inner northwest, but we have the different pockets of the inner city that have combined together. They are quite comparable. So inner southwest, inner northwest, inner northeast, and inner southeast, they each have unique communities. So of course, inner northwest, we've got both the Kensington Sunnyside area and the University District, I'd say, as unique areas. Bridgeland in the inner southeast is a big drawer for people. In Inglewood in the inner southeast is that kind of unique, cool community. And the Marda Loop area, of course, in the inner southwest. So that's where you do see the majority of multifamily product is kind of in these trendy, walkable neighborhoods. And that's also where you see a lot of young professionals wanting to buy or live or rent because they offer that close to downtown, but not right in downtown lifestyle. So for concrete, average price per square foot currently is $561. These, of course, are reflective on the number of projects. Wood frame $490, and the average townhome price is $333 on a price per square foot basis for the inners. And when you compare to the outer markets, though, quite different price points. So the outer north, you're seeing townhomes and wood frame, start at under $300 price per square foot. Outer south is a little bit more expensive, but Calgary does sprawl, and a lot of these prices are at the very edge of the sprawl. So that is with the suburbs here. And now just to touch on some other stats. So product type, what's selling by quarter. As I mentioned, concrete, you will see low numbers as long as there's low numbers of concrete product in the Calgary market. That does not have anything to do with the fact of people wanting wood frame or concrete. In fact, I do still believe people are drawn more to that concrete product for the sound, for the longevity of the product itself. But those sales numbers are really reflective on the number of actively selling concrete projects. Of course, the majority of concrete projects would be located in the downtown, but with the 8 out of 10 of the downtown projects being over 90% sold, you're not seeing high levels of concrete sales at this time. Wood frame, just more number of projects, and of course townhomes on those outer suburbs just seem to move. Their price point affordable, and they've seemed to stay steady as well. And I also just realized that chart was outdated, so I'll get you the updated Q2 numbers for that chart, and I'll send it out to Kaylee after to share with everyone. And the other thing that's important to look at too is what's available. So the released inventory on the market. In terms of inventory, this is what you're competing against. So for new builds, in that concrete condominium market right now, there's 630 units. Those are unit numbers across the market that you'd essentially be competing against if someone's looking for that concrete product. So as you can see here, just less of that available, which does lead to an opportunity there. And I'm going to dive into the purpose-built rental market. So as I mentioned, so with the Calgary market, we typically saw we were very driven by the for sale condominiums. And in the past few years, we have seen this purpose-built rental boom. So where I do think that purpose-built rental boom has come from is a little bit of lifestyle changes. I think especially for the younger generations, just not wanting to commit to owning a home right away has led to people wanting to rent. And these purpose-built rentals that have come to market have really taken that American idea of all the amenities and the cool spaces and like a rental building that you can be proud of and call your own, and they plot them in Calgary. And it has attracted people. It's absolutely done well in the Calgary market as most of these buildings have leased up. Now, is that sustainable? I get that question all the time. I'm going to touch in a few minutes on the numbers of purpose-built rental projects coming to the market. However, the biggest trend that we've seen across the rental market is that our rents have remained very steady. Right now, the Calgary average is $2.06 rent per square foot. I think Toronto's average is something like $4, so it is higher. But of course, that differs with price of buying units there too. But we have seen just this demand to rent too. So I do think that demand to rent is also opportunities for investors who are looking to rent out those units. Right now, I believe the average price for a brand new one-bedroom unit is around that $1,500 to $1,600 a month, depending on location, and two-bedroom units for the most part are going for over $2,000 a month for new. So a lot of these new build condominium projects will be competing with this purpose-built rental. One of the trends I'm curious to see is the use of amenity space during COVID, because that's of course been such a big selling factor for the purpose-built rentals, is going to a smaller living space so that you can utilize all the amenities. But if the amenities are closed, is that going to be an impact? Are people going to want larger units? I do anticipate that to be a little bit of a trend, but I think that's a great opportunity to, even if you're looking at investing, look for units that may be a little bit larger just to give that space. It really depends. That's going to be one that we'll kind of have to track the trends over the full year to really analyze, but it's always useful to keep an eye on it. So with that, as I mentioned, the amenities in the Calgary purpose-built rental market, quite comparable to some of the Toronto projects, but we are seeing a range of things, including fitness studios, golf simulators, lounges, dog parks. You know, the opportunities are endless, but I do think it was very much a trend for the past 2 years, and if things are closing down, I think the trend may shift a little bit back towards your actual living space as opposed to the common amenity areas. While they'll still be important, people will prioritize, you know, their room and their living quarters more than they have been. And so similar to the new multifamily home, we are tracking the purpose-built rental on an ongoing basis. These are averages. So right now in the Calgary new rental market, there's over 62 projects that we're currently tracking that have been built within the last 10 years. The average in the downtown for rents is $2.38 a square foot for all new purpose-built. Across Calgary, including Airdrie and Cochrane, we are averaging $2.06 a square foot for rental, and that has factored in all incentives. So if you are looking for more details on certain projects or areas, feel free to email me or reach out after this demonstration, and I'd be happy to send you what I can on it. And occupancy, so of course we track just the newer product, 10 years and newer, so people will often come to us and say, your numbers are so different from CMHC's, and I kind of have to say, yeah, they are, because it is just brand new. So when you look at this chart here, Q1, we're currently sitting at 87% leased. You're probably saying, like, isn't occupancy supposed to be, 4 to 5%, or sorry, vacancy like 4 to 5%? This is just brand new products. So every time a new purpose-built rental gets brought to market, all those available units are factored in here. So in Q2 right now, I believe we've had 7 or 8 new purpose-built rental launches that have now, of course, increased that vacancy rate. But the biggest number that we're looking at is, of course, the absorptions for purpose-built rental. And we're seeing these new buildings kind of lease up in a couple of months' time, all of their units. So we see very strong absorptions, but the occupancy vacancy really matters on what projects have come to market at a given time. And just as mentioned, a big trend that we have seen is this flip from from what was planned to be a condominium project to a purpose-built rental project. Right now, there's 73 purpose-built rental projects in the planning stages for Calgary, which will equate to 20,000 units. I don't like to look at that number though, because in Calgary's case, it's really what's under construction that matters, because there's a lot of development permits, plans that don't follow through, or they change their ideas. So what's under construction is what I like to look at, which across all of Calgary's 26 projects, I'm not worried about an oversupply when I look at what's currently under construction. However, of course, if all 73 projects were to come to construction, I would be a little skeptical of an oversupply, but that will not be the case in my knowledge, to have every single one of those projects come to market in the next few years. So always good to keep an eye on, but really it's not a concern to me at this very moment. So that is kind of a quick overview, but I wanted to free up a little bit of time for Q&As. I think we only have like about 12 minutes, but I'd love to answer any questions that you have, or talk about any of the projects on the market, or my thoughts on certain areas in Calgary specifically. No. Keely, do you have any questions?
No, I think that was awesome, Kim. I think that really gave a good perspective on what's happening in Calgary. I think despite what the media says, the data that you have shows that we have resiliency, there is stability in our market, and there's still some really fantastic opportunities to be had.
Yeah, I agree. And as I mentioned, like, when I saw the decline of 18% in home prices, we really have not seen that on the new multifamily market. That's not to say it's not happening in certain parts of the market, but on the new multifamily side, prices have remained pretty tight to what they were. We, of course, have not seen like huge skyrocket increases of prices either, but I think we're holding our own, which is good to see. And I truly thought the numbers would be worse than they were, and I was very happy, considering everything was closed, to see that myself too. And as I mentioned, like, I do think there's going to be people who their lives have changed with COVID, whether they're working from home now, whether they're, need more space, or they were planning to move to the US and that's not happening. So it is interesting to kind of see that shift, and also see those people actually end up maybe choosing to purchase as a result of some of these life changes that were unexpected.
Totally, yeah.
Question, has this been Yeah, I can. So I'm going to send a copy, and I think it's being recorded so that you can view the presentation after as well. If anyone has further questions too, you can reach out. My email is just Kimberly@Urban Analytics, but I'd be happy if you kind of want some insight on the market too to share that, or if you are considering doing something with Graywood here, then I'd be happy to even like go over some further stats if that is of interest to anybody who's a part of this call. So don't hesitate to reach out at all.
Yeah, we'll send out the recording and also the slides from this presentation as well, so you guys all have it. So of course you can reach out to Kimberly. You can also reach out to Andrew or myself if you have any questions about the suites that we have available, the opportunities. We still have some great suites, and like we said, 65% of the building is priced under $500,000. So there's some fantastic opportunities in both 1 bedrooms, 1 bedroom and dens, and 2 bedroom suites.
Awesome.
All right. Well, thanks everybody for joining us here. I think, Kim, that was, like I said, that was awesome. So much good information for everybody. And yeah, we hope to hear from everyone soon.
Well, thank you so much, everyone, for taking your time out of the day. So I appreciate it, and thank you for having me to speak on it. We also will be sending out our second quarter multifamily report by next week, but you guys have got the insight on the stats before anyone else. So.
Yeah, that's great. Thanks so much, Kim. We appreciate it.
Thank you.
Have a good day,
Thanks, Kim.
everybody. Bye.
Bye.